Hello, everyone. In this lecture, we are going to discuss the cash flow statement. So this is the final major financial statement that we will be covering, and the cash flow statement is usually called the cash flow statement. And you would be able to identify the cash flow statement because it has three sections: operating activity, financing activity, and investment activity. So here is a screenshot of Intel's, I'm not sure if we're looking at Intel, but it's a publicly traded company that we're looking at. And as you can see, it has the three main items. So here you see cash flows, statement of cash flows, and then cash flows provided by use for operating activities. Then you have cash flows provided by use for investing activities. And over here we have financing activities. And what the cash flow statement does is it shows the changes in these three activities. And there are inflows and outflows. So if it's an outflow, you'll see parentheses. If it's an inflow, you won't see parentheses. And what this does is it shows how well a company can generate cash, pay its debts, and fund its operating activities. And from this information, you'll be able to determine the free cash flow that a company has. So on all cash flow statements, you will see cash flow from operating activities is always listed first. Cash flows in and out of an organization that are related to the operations of the business: cash that customers send in, cash a company pays out for salaries and vendors. And for investing activities will be listed second, and these will be investments made by the company, purchasing and selling of assets, etc. And cash flow from financing activities is listed last, and this involves activities of borrowing and paying back loans. So free cash flow is a financial metric that is used to measure the overall cash and financial health of a company. The calculation is the net cash provided by operating activities less net capital expenditures, property, plant, and equipment. And capital expenditures is typically a negative number. If it's not, you want to remove the negative number for the calculation. So in this example, we can see the net cash provided by operating activities is $35,384, and their property, plant, and equipment is taking these two numbers, the negative $14,259 and the $194, for a total of $14,453, which gives the company a cash flow of $29,931. So the free cash flow, again, it tells you how much a company has left over after it's paid its operating expenses and the ability for it to maintain its capital expenditures. It tells you how much cash the company has available after subtracting the costs to run the business. So once you do that calculation, the free cash flow, is this figure, and this is something that the company can use for a variety of reasons. They can pay some dividends with that money, they can reinvest it into the company, they can acquire another company. So you can verify or check your work of your free cash flow on yahoo.finance.com. So you go to Yahoo Finance and you type in the company's stock symbol. So INTC, that's the stock symbol for Intel. When you get to this page, you're then going to click on financials, and then you're going to click on cash flows. This will be the results on the screen. And if you look at the very bottom number, free cash flow, there's that $29,931, which matches up to what we did on a freehand calculation. So just to give you an idea of how the cash flow statement and the balance sheet are connected. If you look at the balance sheet, you can see that the cash and cash equivalents, 58.65 and 41.94. And then if you look at the cash and cash equivalents at the end of the period on the cash flow statement, you can see that those numbers are the same. So here's what we've learned through this lecture. The cash flow statement shows the inflows and outflow activities that occurred throughout the year or whatever period you're examining. It could be a month or a quarter. It has three main categories: inflows and outflows of operating activities, investing activities, financing activities. Negative numbers are outflows, positive numbers are inflows. And from this, you can determine the free cash flow that a company has.